Get cracked. Wake up, motherfucker.
Fall is here and winter is coming, and you need to shop Lowe's Customs. For the ladies, there's stunning designs and colors. For the men, Lowe can make something manly to keep your insecurities in check. But wait, there's more. For you simps, there's a special Simp Edition, where Lowe will roll around in it, blow smoke from the finest Southern Eastern American marijuana. She'll even rub her pretty feet all over it just for you. So what are you waiting for? Shop Lowe's Customs now, exclusively on the John Galt Urban Landlord channel. Let Lowe help you stay cozy and warm this season. Shop Lowe's Customs today.
Get cracked. Wake up, motherfucker.
Hello, testing 1, 2, 3. Should be working now. All right, guys, this will be the first show. Doing an independent show. I guess I can start a little bit, a little update, and then we can move on to a little lesson. I'll try to do a little lesson. I didn't really plan on making a thorough lesson for you guys, but it might give you some ideas of what I'm thinking of doing in October. So, I was trying to make this thing last month, but we ran into too much drama, and then we had to jump into the 24-hour streaming business, and so I didn't get a chance to work on it. But let's see. Now that Stanley's taken over most of the day and night shifts for me, you don't need I don't need to devote too much time on the 24-hour streams too much. I can start looking at lesson planning and I guess try to give you more updates on individual stocks and tickers. Personally, me, I don't try to do anything too aggressive, but I think I'll just tailor it to however you guys want to deal with things. Let's look at something right now. Now, the most interesting thing is Chinese stocks. Okay, China's been on a tear these past couple days. It's now up around, let's see, 13%. Yeah, I'm almost 14% over the week. So every time China jumps in the overnight session, the U.S. picks it up and doubles its gains. So each day it's been doing quite well. So today we get another big boost. I think I think what I'm gonna plan to do is assume that this pattern is gonna work out this way here. Now, on the top, I'm showing a Wyckoff diagram. Okay, and I'm gonna explain that later in the presentation. But for now, you should notice that this is a 1 week chart. Each bar is 1 week, and it's making a nice base here. I mentioned this uh, the last 2 nights, and it's making a nice base. And this is exactly what I want to see. You see kind of a initial stopping area here, which corresponds to this area called SC. I'll go over these acronyms later. Just look at this chart here, and then follow the bottom one. See how well they match up. And the Wyckoff method, they try to, you know, look at every chart as an accumulation, which is what this is, or distribution, which is the opposite effect, where you have a topping and then a crash after. Here, you're seeing an accumulation and then the final rise out of the range here. So once China finishes this move, the Chinese stocks, and we crossed this last barrier of 22,000 in the Hong Kong Hang Seng Index. That means we're free to move up back to probably when maybe the 2018 highs. That could be quite good, actually, if it goes back up there. A lot of Chinese stocks are still very depressed. So even you see this big move, there's a lot of them that are still very cheap, very cheap. That doesn't mean I'm saying you buy them for long term. What I will say though, it's very good for trading, very good, because if you see these type of moves, they can retrace very. They can do a real quick snapback. So even they have these large crashes, they snap back very fast. Okay, so you can make a quick flip in a couple months on some of these stocks, which will have to I'll have to go through individually and see, pick out which ones are the best odds of doing what they should do when the whole index rises here. Anyway, so after the first initial setup here at SC, we can see that it does a ST phase. So the phase B is around this area here, and you can see it's moving back down. You can see it kind of does that here. And then you see this phase C is the final bounce off, and then it does a little push up, and then a last point of support here, the LPS. And then now we're entering into SOS phase. It's jump the creek, essentially. This is what they call jumping the creek, because these little areas where they're pulling down, you can think of them in like a river of supply. And then finally it jumps. And then once it does this final move, it should just have a little accumulation here. Like we can just zoom in and say every day it just has more volatility. But as long as it stays kind of building energy, rather than dropping back down here, just builds up, then we know it's in final move. It's finally gonna be ready, its final move to break out of this level, go to 22.5 thousand, and then break out. So in the meantime, watch it over the month of October into November. If Trump loses, I definitely would consider being more aggressive in China. If Trump wins, maybe yeah, we'll have to see what how Trump's rhetoric on China goes. I'm sure he's just gonna keep pounding and harping on China every day to the media, and that's gonna be a problem for a lot of these stocks because it adds too much volatility. You might not be comfortable with holding it for a swing. Anyhow, in the other news, I think I did this morning as well. I talked about Micron. So Micron today had earnings on yesterday, right? So today is the reaction. Let's see, about 15.88% during the opening bell, around that 18 to like maybe close to 18% up here before it fell back and pulled back up, but still held most of its gains. So that's a good sign because you see here this was its last high. So you see it held that, so it kept that area. I think I think we should see something. Oh yeah, and it had I talked about it maybe 2 weeks ago. I said the news basically came out where 2 analysts downgraded it. Let's see, double down. Okay. And I think there was another one that tried to downgrade yesterday too. I don't remember what day it was. It could have been down here. But in any case, when you see something in the news like this, where they downgrade a stock maybe just before earnings, that tells you something that you probably should be buying that stock because why would you be downgrading it before it releases results unless you're trying to artificially push the price of the stock down so that you can make it easily pop back up. So if it's working like this right now, we can see its effect on the semiconductor index here, the SOX. Okay, so SOX is the tracks the Philadelphia Semiconductor Index. SOXX is the ETF. And I'll talk more about ETFs later on as well. I think a lot of you guys probably don't know what ETFs are. It seems like I'm just assuming that people know these things off the back of their head, but even basic terms like ETFs, yeah, people don't know about still. So we can discuss a little bit more. Maybe they'll clarify things. But in any case, the semiconductors, they lead the market right now. Okay, they lead the market because the Nasdaq is what's leading the market. The Nasdaq composed of technology stocks, and within the Nasdaq is the semiconductor stocks, which is even more aggressive. And you can see where it's still not back to the original highs of July. Okay. And yeah, we're right here in July. That was the high of the Nasdaq as well. But the Nasdaq is almost at its top. Now, the major index, the S&P 500, is already at a new high. Okay. You see it. It's already at a new high. So the high of July 16th for the S&P 500, it's already broken that since Jerome Powell talked last week. So we can see the Nasdaq is almost caught up to that. It's back to its high in July 11th, almost today. But the semiconductors still have room to move. We still have a lot of barriers here to cross. Many, many, many barriers. Now, this chart's a little too dirty. Let me give you a cleaner one. Okay, so this has less lines for you to look at. This is what I was expecting here. Are we going up here? Or are we going down here? Um, I think we've covered both bases. Now we're going back up here. Once we hit here for the Nasdaq, we'll see if we can make a new high next week. So we have about maybe from today 12, 13 more percentage points to go to get back to the old top on the SOXX. So that's about it for there. Let's see what comments you guys have. Hmm. Yeah, yeah, we only have 720p on this sucker, so I remind myself to blow up these screens. Anyway, yeah, that's good. Good for now, I think. I'll show you something else. I'll show you what I did for my parents' portfolio. So what I did was I used SOXL. Okay, SOXL is 3 times the movement of SOXX. Okay, you see this SOXX? I do SOXL. So I don't do options. I'll just use these ETFs. ETFs will basically move 3 times that. It's not perfect though. They have decay. So when you have these volatile days like this, it's not going to be nice to be holding that. So if you're using SOXL, it's only for short-term trading. All right. So if you get the dips like here, basically. You got this one, you got this one. Once you climb back up, you gotta start thinking about selling. You gotta get rid of them. Once you make profit, you just gotta get rid of them. So what I did was like I waited, hit here first. This was like first level of support here. Because if you look at XOXX, that's the bottom of this rectangle area. So anything at this bottom of this rectangle, I decided to just start buying, start accumulating. And then once you hit these blue lines, this blue region here, I was just buying a lot more. So you can scale them. Like let's say you started buying here a little bit, but once it dropped more and more, you just bought more shares, increasing the sizes as it goes down. Because you never know if I bought here and it went back up, that would have been fine too. But I wouldn't have bought any more aggressively, I don't think. But you always have to put in your back of your mind that even when you have these type of drops, you don't know if it's over, right? You really don't, because it wasn't over. Actually, the Friday was worse than the Monday up here, and then finally the next Monday it completely collapsed, freaked everyone out when they had the Bank of Japan and all that stuff happen during the weekend. But I was prepared for it and bought a ton more. So by the time it increases back up here, you're not worried, because I can sell the position I bought here up here, and I can definitely sell anything early. If I bought down here and it went up here, I probably could have sold a little bit of those positions and then sold the rest once it completed its move up here. back to this box. So this rectangle, which was set by this red bar long ago. So when you start reading the charts, you can easily see where there's these areas that make a lot of sense uh, for you to guess that this was where it will stop. But there's no guarantee. Nothing is guaranteed, especially when people are panicking and you expect bad news to come over a weekend because this was a bad Friday, and you know there's a weekend. You know the news will probably try to pump the worst kind of news possible on Saturday, Sunday. So by the time they wake up in the morning on that Monday, it had to drop some more, and it did, but it quickly recovered. So you see that green candle recovered uh, during that day. Each of these candles are daily candles, by the way. So today we had an interesting moment. We opened here, we went down, we lost all the gains, but then we climbed right back up during the session. So I'll just zoom in here. I think will be interesting for you guys to look at. So if you look at the hourly chart here, everything's 1 hour. You don't notice anything interesting, right? But if I zoom into like 3 minutes, it looks very interesting. So it opened. Let me get rid of this. It opened here. It went nowhere for a while. I think Jerome Powell was already talking. Jerome Powell had like a pre-recorded video, and they just played it in some boring economic conference just before opening bell. It was probably he was just still talking at this point. Blah 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 blah. Once the video finished and there was nothing profound that he said, he didn't say anything new. The Basically everybody just sold because they're like, well, he didn't say anything new, nothing good, nothing bad, right? So every trader that bought here and was in here and waiting for something different, um, I guess they got bored and started selling. And what you see is that, like, you see this huge volume on this red bar, the final red bar, and then after that is a green bar, and this is 3 minutes, okay? So if you're a day trader and you're just watching this, you see this, you'd probably be like, hmm, I think I'm just gonna buy here. I'm gonna take a shot. And then you're just gonna keep holding, hold. Because as long as you don't go drop below here, you probably set a stop here, stop loss. So a day trader would be thinking like, okay, I buy here, somewhere here. I'll set a stop maybe around here or here if I'm aggressive, and I'll just let it ride for the whole day. So if somebody did that, this thing just recovered so the whole loss in the morning was just recovered all the way in the afternoon, right back here. Hmm. Before it had this is just before closing, right? This is like maybe 30 minutes before closing. They're just wrapping up what they traded. They're like done. They're probably selling. They're starting to sell right here. There's no more movement. Sell before the final sell. So this is a very good day trade. Actually, if you're doing options, you guys probably thinking like, oh, who cares about 2% drop I mean, even 2% is pretty damn good actually. Then you get like a 3% gain, right? From here to here, here to here. So like, yeah, 2 to 3% round trip. It's not bad. And for options, 2 to 3% movement in an index, if you're playing options, that's probably like hundreds of percentage points down here, back up here. Um, in any case, that's something to think about. But what I'm trying to illustrate is that this area, when you see this kind of buying here, it tells you that next week is probably going to be a very good week because if tomorrow I see another green bar to get over this box, I'm very confident that for most of next week, we can really ride it back up here to this level. And since I said I'm using a 3x ETF, um, I think I could probably get about 50% gain, another 50% gain. That's really good. That's really good. So I'll just show what I got for my parents this past month. I'll show you my gains for my parents' account. And mind you, I'm very conservative, all right? Especially about not only for my accounts, my parents' accounts for sure. I don't take a lot of risk. But even when I'm not taking a lot of risk, I'm just making easy money. And this is why I'm just I'm just trying to see if I can teach you guys these things so that even though you don't have a lot of capital right now, a lot of you don't, and you might want to go look into options or futures trading to get the extra juice. The ideas and concepts should be the same so that when you do get to a point in your life where when you have 100,000, you know, to spare, you have liquid capital to spare, because you're not using it for anything. You can decide, hey, I'm going to use a part of it to do some trading. So this is just going to just try to give you inspiration here because, like, here, this is my parents' account here. This is just one of their accounts, right? And I just bought this ETF, Stock Sale, and this is what I got in a month so far. That's like 35%. That's like pretty damn good. Like that's really excellent for 1 month's work, and that's like nearly 30,000. All right, and I just used a cost basis of 80 G's. That's it. Now I could have been more aggressive because they definitely have a lot of money that I could have just threw into it. But the thing is, for me, that's risk. There's no guarantee in this business. So I don't want to risk more than I have to for them. And that's why options can be something to consider because options you require very little capital to get the same kind of gains. But it is inherently more risky if you don't know what you're doing. So that's because I'm a lazy person. I don't like to deal with it because options is not only just price. You have to figure out actual days that you think certain things will happen so you manage your risk in terms of decay because options work on time and price. Buying and selling is just based on the price itself. You don't really have to worry too much about time. I could keep waiting for this thing to hit my target for another month or so. I wouldn't mind. But when you're dealing with options, everything has an expiration date. So you have to know how far along you want to say, hey, I think it's going to hit this price. So I'm going to have to make sure my options are dated far along the way or making sure. And there's also premium costs. Some contracts are not worth doing because even though you know it's going to hit certain prices at a certain time, the cost of that contract is just not worth it. These are things you have to consider when you do options that you don't have to consider when you're buying and selling just straight shares. Yeah. Anyway, but futures, that's why I think a lot of you guys might like futures better, right? You don't have to think about those things that options do, and you get like really good leverage. But then you're just restricted on just playing with the futures. And I think that's enough. I think doing playing the Nasdaq should be enough. Like CKJ3 loves doing the Nasdaq, and I think yeah, you can just do that. Anyhow, anyhow, but you can see, even being a dumb like me, just doing ETFs can make pretty good money just with this. Uh, and if it goes another 50%, you see that's really nice, right? From your point of view, I think a lot of you guys maybe, depending on the capital that you amounts that you have, this might not be what you want to do. You might have to be more aggressive, but in that case, either you're going to play your options, play futures, or you're going to have to do something at work to try to boost your wage situation. I don't know how you're going to do it, but in any case, just stick with me. Just learn the charts. Even if you got nothing, you got no money, just learn it. Because once you learn it, you'll know and remember what I told you, and you can go back to these videos. And then when you do have the money and be able to buy and sell like I can, then your life will be a lot easier because it's extra income. This is an extra source of income that you can always rely on. Yeah, that's about it for that. Now let's go on to our lesson. I think we can go on to our lesson. We'll just talk about Wyckoff now. I'll stop sharing this. That is it. Browsing. Man, StreamYard is so annoying sometimes. All right, here it is. Okay, let's first go over the calendar. So today's Thursday. Tomorrow, what we will have. So this is Pacific time. Okay, guys. Let me. I can change it to Eastern. I think it's -4. Is that right? Okay. Okay, I think that's right. Okay, this is Eastern time. 8:30 a.m. core PCE price index. So this is going to be an important number, but because we already have CPI and PPI released 2 weeks ago, this number is probably not going to surprise anyone. I don't expect anything to happen at 8:30 a.m. before the market opens, but you never know. Maybe something will happen. But what's more important is at 10 a.m. we'll have the Michigan consumer sentiment. This is the inflation expectations is probably what the Fed looks at the most. So depending on what number it is, maybe it will shake up the markets. If it's positive, uh, it's positive meaning that the consumer expects less inflation in the future. Then, yeah, stock market can rise on Friday. There won't be anything much. I think Monday Powell will talk again in some dumb conference that probably nobody listens to. But yeah, we'll have to keep an eye on it. 1 o'clock Eastern, and a Tuesday we'll have ISM manufacturing PMI. I don't think there's much else, and service PMI on Thursday. So there'll be two data points to look at next week, on Tuesday and Thursday, and maybe something on Monday if Jerome Powell. But I don't expect too much going on. Um, I think the market should just keep rising up until here, Friday, the big daddy uh, payrolls data. So unemployment rate. These will be the most important things. So maybe let's say the stocks move up all the way till Thursday. If bad news is going to drop, then Friday would be it. That will make a lot of sense. If this number stinks, then the news media has all weekend, Saturday, Sunday to drop more bad news and make the stocks crash all the way into election. So if I was an elite and I controlled the newspapers, this is probably what I would do. I would wait for payrolls to come out. If payroll numbers are bad, I would leverage that by making people panic more on the Monday. So if people start panicking Friday, I can make the stocks drop even more on Monday. And then if there's a really big drop on that Monday, that will just pull in the rest of the week down. So the whole second week of October, yeah, they'll just be nonstop red candles. So expect that. I think you should expect it. Expect the worst. Let's put it that way. Now we can talk about ETFs now. Um, Maybe I should go through a definition of ETF. Yeah, because it seems like some of you guys confused it with NFTs or something. Well, there's only one. I think Woody was the one that was confusing it with NFTs. Let me look at this. Let me see if this definition is good. What is an ETF? Here we go. I think Investopedia is pretty good. Investopedia has to be like I haven't seen any definition that looked funny to me anyway. I think this is good. So an ETF, exchange traded fund, is a pooled investment security that can be bought and sold like an individual stock. Okay. ETFs can be structured to track anything from the price of a commodity to a large and diverse collection of securities. Okay, this is what we are interested in right now. So ETF is something, right? Is an instrument here that's just going to track a bunch of other stocks. That's what they mean by security. Now, securities can also mean bonds. All right. So it could be stocks, it could be bonds. But for now, let's just consider only stocks. They're just a group of stocks. So you heard about when I talked about the SPY, right? Well, let me go back to that SPY. Let me see. Here, let me just do this. This is dumb, but okay. Remember that? This is the SPY. So that's a ticker, SPY. It's not a company. It's an ETF that tracks an index called the S&P 500, right? And the S&P 500 is 500 stocks. So this ETF tries to replicate the movement of 500 stocks together, bundled in a package, right? Um, let's look up what the S&P 500 is actually before I continue on. Maybe some of you guys should really know what the S&P 500 is. So the S&P 500, the Standard& and Poor's 500, is a stock market index tracking the stock performance of 500 of the largest companies listed on stock exchanges in the United States. Now, I think a lot of you older folks out there, or you remember your parents, maybe they start screaming at the TV, and what would they talk about when they talk about stocks? I think they would say the Dow Jones, right? Not I don't I think back in those days, they really just said Dow Jones, Dow Jones, Dow Jones. The younger folks now, we've stopped talking about the Dow Jones. The Dow Jones is really irrelevant, uh, and the reason why is that because the Dow Jones is not a market cap weighted index. I won't get into that right now. Okay, I won't get into that. But I'll just read this second paragraph here, the beginning of it. The S&P 500 index is a free float weighted capitalization weighted index. Okay? So that's why I said cap weighted index. I'm not going to get into that right now. But keep in the back of your mind, we don't talk about Dow Jones anymore. This is really something the boomers always were talking about, but we don't talk about it anymore here. Everything we talk about is the S&P 500. That's all we talk about. Now, if you guys want to know more about the Dow Jones is 30 companies only. 30 companies that represent blue chip stocks, supposedly the top 30 companies in the United States. And usually it composes of Coca-Cola. I think McDonald's is still in there. Dow Chemical. Um, a lot of stocks that are seems to young people probably boring. General Electric. I don't think it got booted. General Electric. They added Apple. I think Amazon took a split so they could get added on it. So I think Amazon's on there too. But in general, it's usually stocks that yeah most people probably be bored of. Um, very few sexy stocks. So any other things I can look at here? No, this is probably too nitty gritty to talk about tonight. But yeah, not a bad definition here. It covers a lot. All right, let's get back to it. So the reason I was talking about exchange traded ETFs, the whole thing, exchange trade fund, I mean, the ETFs. ETFs can even be designed to track specific investment strategies. Hmm. Yeah, that's true. So there's some ETFs that have dividends or they track meme stocks. You heard of them? I also noticed some of you guys in chat talk about ETFs that track what Nancy Pelosi bought, right? Yeah, they have ETFs that track the Senate and the House members' stock picks. But in any case, let's see how it works. An ETF must be registered with the SEC, so Securities and Exchange Commission. Most ETFs are set up as open-ended funds. Hmm, that's actually, I don't think I want to get into what an open-ended fund is. Um, yeah, I don't think I want to talk about that right now. Okay, and are subject to the Investment Company Act of 1940, except when subsequent rules have modified their regulatory requirements. Open-ended funds do not limit the number of investors involved in the product. Okay. And there's no transfer ownership. Yeah. So ETFs is relatively a new thing. When I started doing investing in the 90s, there probably were very few ETFs, maybe only 2 or 3 that were popular. Nowadays, you see there's lots more ETFs to choose from, and a lot more people use them. The other way was the mutual funds, uh, but, I don't think there's need for I think John and I were discussing mutual funds and ETF before too. I don't see much benefit in mutual funds, um, and mutual funds you can only see if you have 401(k)s and stuff like that, or pensions, where you can actively manage things and they give you mutual funds, but it's really not necessary. ETFs give you so much flexibility now, and there's so many options that you can do your own you can make your own custom mutual fund in a way just by using ETFs, and we'll discuss that, down the road. So, let's see what kind of ETFs we have here. Passive ETFs. Passive ETFs aim to replicate the performance of a broader index, okay? So just like SPY I mentioned earlier, that tracks the S&P 500 here, right? So this is SPY. So it's priced at 572 and 30 cents as of close today. That should tie into the index, which is priced at 5,745. Now, it's not perfect, okay? But theoretically, it's like you take this number and divide by 100 and you get what the SPY number is. But it's not perfect, as you can tell. And the Nasdaq's even worse. Like, here, I'll show you. Like the Nasdaq is like 489 and 0.47 for the ETF, Nasdaq ETF QQQ. Now, if you look at Nasdaq 100, the index, yeah, you see that? It's 20,115. So it's not, I can't just divide that by 100 and give you a nice number to make you the ETF. But believe me, this price tracks the other price. All right, even though it looks different, they're supposed to track each other. So if I pull it out to like 1 year chart here, should look the same as this, right? So you can tell visually it looks the same about. Not exact, but yeah, pretty much the same. Anyhow, let's go back here. Let me check if StreamYard's still working. Yeah, very good. All right, let's go back. Passive ETFs, like I said, that's the SPY, that's the QQQ. Now, actively managed ETFs. Let's see what they do. Do not target an index or securities, but rather have portfolio managers making active decisions about which securities to include in the portfolio. Now, the active managed ETF would be like that ETF I mentioned earlier that tracks what Nancy Pelosi buys and sells. So when she reports to the SEC, hey, I sold this or I bought this, that ETF would have to dump or buy whatever she did on that report. So that's why it's an actively managed ETF. That's what it would be. Okay. Now we have these other ones like bonds and stock ETFs and things like that, but commodities, currencies, oh, Bitcoin. We have Bitcoin too. I forgot about that. Ethereum, we have that. Leverage ETF. I mentioned that, didn't I? Let's look at this one. A leverage ETF seeks to return some multiples. Example, 2 times, 3 times on the return of the underlying instruments. If the S&P 500 rises 1%, a 2x leveraged S&P 500 ETF will return 2%. Okay, you see how that works? So if something moves at a certain rate, a 2x, 3x, and some we have some 4x now ETFs, so it could be 4 times. It can follow it. Now, if the index falls 1%, the ETF would lose 2%. Okay. All right, let me give you an example of that. So we see here QQQ, right? Now there's a 3x QQQ. They call it TQQQ. Look at that. You see here, today it ran up 2.12%. All right, let's go back to QQQ. What is it? 0.75% today. So if we multiply that by 3, yeah, that's roughly 2.12%. It's not exact, all right? It's not exact. That's kind of the problem. You're not going to get exactness with this. And this is where the decay comes in. So that's why I tell you, if you're playing with the leverage ETFs like TQQQ or SOXL, don't hold it for too long. They're not made for you to hold it for a long time. It's really not a good idea. So you shouldn't be treating them like an investment. They're really just for trading. Okay, we got that out of the way. Let's I think that's enough. Oh, this is nice. They give you a comparison between stocks. Yeah, we can go over this later. Yeah, I'll go over this later. But I think it gives you a basic idea of ETF, and I think I'll cover more at another date. So, why did I talk about ETFs for you for now? The reason why is because the S&P 500, okay, can be broken up into 11 sectors. You see this little pie chart they got here. Nice color-coded pie chart. The 11 sectors represent a breakdown of the S&P 500 into categories. Nice categories for you to look at. So for example, you see XLK is technology. So stuff like Apple, Intel, AMD, Nvidia, they'll all be in that one. You have XLRE, that's real estate. So essentially companies that own properties, give you large dividends. So kind of like John, okay? Think of John. If John was a big landlord, he had tons of properties, big ones. And he wanted to split those profits with you on the public market, he could do that through dividends. So you would buy a stock that would represent a percentage of his actual properties. Okay. You own a piece of his property theoretically, right? Not truly. You don't actually own any of his properties, but theoretically, he can break up his and abstract away his properties, his buildings into chunks for you to buy on the stock market. You buy a share, you buy 10 shares, and each of those shares you get a quarterly dividend. Every 3 months, John pays you like 20 cents per share or something like that. Okay, let's just say for example. So you can have stocks like that. And you have other stocks too, like drug companies, I think. XLV is healthcare, so drug companies that give you that nice Ozempic to lose your weight on, they'll be on in that sector. So essentially, we have 11 sectors. We can divide up 500 companies into their categories here. Now, where should we go next? I'll go over each 11 sectors for you, okay? So we can look at XLC, Communication Services. Now, you remember this pie chart here? It was all evenly divided. Guess what? When we look at the S&P 500, some sectors will be a larger portion of the S&P 500 than others. Okay, remember that. This is very important, I think, for you to understand. This is why it's not like the Dow Jones, okay? This is why it's cap weighted, cap weighted. So companies that have more value in the S&P 500, they'll start increasing the size of their weight inside this pie. Okay. So XLC is 8.78% of the total weight of the S&P 500. Okay. XLC is including companies like Facebook. They changed their name to Meta. So we can look into this right now. So let's see what's in XLC. Let's see what's in XLC Communication Service. Yeah, I was right. So the first one is Meta, Facebook. It's 20% of that 8%. So remember here, this pie of 500 companies, 8.78% is XLC type of companies, and 20% of that 8% is Meta. So that's why you look for companies, the largest companies in the S&P 500, they drive the whole stock market. So the first one is Meta, The second one is Google. And actually, Google has 2 classes of stock, Class A and Class C. Now, I don't wanna get into that right now, but you're gonna have to add these 2 up. So 10.67 plus 8.81 is the total weight of that company, right? So that's about 20% as well. Okay, let's just round it up. Let's say Google is 20%, Meta is 20%. So 40% of XLC is Google and Meta. So that's why when I talk about earnings, I usually ignore most companies' earnings, except for a few companies. I look at Google, I look at Meta, I look at Nvidia, I look at Apple. Yeah, there's very few. Tesla is another one, and I think there's 2 more. I forget which. Yeah, there's 2 more of them. Yeah, I'll remember once we go through this list. Let's go to the next guy. XLY, consumer discretionary. Consumer discretionary stocks are like stocks that you don't need to buy. You just feel like buying when you have a lot of money. And this will be interesting for you guys to look at. Let's see what companies are in XLY. So, oh, I forgot Netflix too. Netflix is also important in XLC. Yeah, I forgot that was in this sector. 6%. Disney, huh? Okay. Okay, XLY is 10%. Remember that. It's 10% of the whole S&P 500. Aha, 22% of that is Amazon. Okay, so when you buy your stuff at is always Amazon, so it's definitely consumer discretionary. Tesla is another one. Now, some people might say like, "Hey, man, Tesla is a technology company. It should be in the technology sector, right?" But, well, they put it in XLY for some reason. So for now, we'll just have to leave it like that. They said it that way. I don't make the rules here. A Home Depot is also discretionary. Interesting. Maybe some would argue that's a Home Depot is a requirement to have. You need to buy your wood sometime, right? Yeah, 8% of it's Home Depot. And McDonald's, yeah, you don't need to eat Big Macs if you don't have to. So yeah, that's 4.4%. Lowe's, 4%. But those are the top ones you can see. But essentially, Amazon, Tesla dominate this area. Yeah. Let's look at the next. XLP, consumer staples. Staples are stuff that you need to have. So they should have stocks like Colgate, Johnson and Johnson. So anybody that makes toothbrushes, toothpaste, baby oil, well, yeah, baby oil. That's definitely a requirement. You all need baby oil. So that's 5.9%, okay? 5.9% of the whole S&P 500. Let's look at what that is. Let's see. Let's see what's in there. Procter and Gamble. Oh, I forgot. Oh, Costco. Of course, everyone needs Costco memberships. That's definitely a requirement. Walmart. Makes sense. Coca-Cola. Now that's interesting. I guess in a way, people just can't stop drinking soda, so it might as well be a required industry to have around. Philip Morris, oh yeah, cigarettes, of course. Mondelez, yeah, beer, that's a requirement. All right. Finally, we get to toothpaste. Colgate, Palmolive. There we go. Altria, isn't that beer too? I think that's beer. Okay, Target. Now that's weird. I don't know why Target. You don't need Target. You got Walmart and Costco. You don't need Target. Anyway, that's 5.9%. On to the next one. 3.323% is energy. Energy's a very small percentage of the S&P 500. Now, I think before the dot-com explosion and all that, uh, energy was a larger piece of this pie. But yeah, oil stocks, not that sexy. Not that sexy. That's kind of why I see it's at the bottom ranking here. Okay, let's go. Let's see what's in here. ExxonMobil, no surprise. Chevron, ConocoPhillips, Schlumberger, yeah, and a lot of stuff that you probably don't know about Marathon and Phillips 66. I think if you talk to Master Kim, he talked about Marathon a lot. Yeah. So Valero definitely like AM/PM. Yeah, Arco, those type of cheap gas stations, definitely, definitely. All right, next one, financials. So that's basically banks and insurance companies. This takes about 12.87%. Take a look. Take a look at what we have. Ah, Berkshire Hathaway. That's interesting. Yeah, yeah, yeah. I think they definitely own Geico, so that's an insurance company. They probably own a few banks too. They do some financial services, I think. Yeah, it's 13.3%. So Warren Buffett's little baby. JP Morgan at 9.55 and all the rest. Um, oh yeah, that reminds me about Visa. Yeah, Portia should remind me about that article she wanted me to talk about. I'll have to make a note of that. Yeah, Wells Fargo, Bank of America. If you notice here, S&P Global. So S&P Global are the guys that make the S&P 500 index. They make the Dow Jones index. I think they're in charge of the Nasdaq too. So yeah, I guess they're a financial service as well. Next, XLV Healthcare. So 11.5%. So you should see some drug companies. I'm not sure if health insurance is in that sector or not. Let's see. Let's see what the top ones are. Eli Lilly. I mentioned that a few times. That's one of my favorite boomer stocks to have. 12.77%. United Health Group. Oh yeah, this is HMO, United Health Group. Johnson Johnson. Oh yeah, okay. Johnson Johnson, they stuck here. That got your baby oil. AbbVie, Merck, Thermo Fisher. Yeah. Yeah. I guess they don't have the usual suspects. I thought were on the top. Oh, Pfizer. See, it didn't even make the cut. You have to go to the second page to see Pfizer. Bristol Myers Squibb. Yeah, see, you see some of the pharmaceuticals like the CVS is down here. McKesson. Oh yeah, McKesson. Yeah, that's kind of like the drug distributor. So this Cigna is a health insurance company. Yep. So they have a mix. So it's a mix between drug companies, health insurance companies, and things like that, and drug stores. You saw CVS there. Now XLI, industrials, 8.48%. I think this is where all most of like the traditional Dow Jones type stocks would go in. See what we got. GE, yep, that's right. That's in the Dow. Caterpillar, that's also in the Dow. So, Righteous Muffin rides around in his little tractor, right? So you probably see that around. Yeah, you got what? Uber's on here? All right, that makes no sense to me, but okay, whatever. RTX, all right. Union Pacific, so train companies, all right, that makes sense. Lockheed, Honeywell makes sense, and Deere, yeah, there we go. Deere, another popular company that's industrial. UPS, Boeing, 3M, yeah, yeah, okay. Nothing surprising except Uber. I didn't know Uber was an industrial company, but all right, whatever. XLB Materials. So mining stocks, essentially. This is very tiny, even tinier than the energy stocks, 2.26%. Now, I guess that kind of makes, yeah, that makes some kind of, like, you have the DEI stuff and a lot of the pension companies that runs like public pensions. Yeah, they probably fair a lot of these blue states since they're so anti dirty energy, dirty industry type stuff, they would take away their money out of those stocks. I suppose that would explain some of it, why energy sector and the material sector would be so tiny too. Yeah, yeah, that does make some sense now. All right, yeah, that's another reason. Okay, let's see what's in there. Lind, Lind. I think most people wouldn't know what Lind is. That's a foreign company actually. Sherman Williams. I think you guys know Sherman Williams. Freeport, McMoran. This is a big copper mining company. Okay, Newmont, gold miner. Dow, and DuPont Chemicals right here. Chemicals got here. Nucor is a steel company, I believe. Nucor. Lind. Yeah, I don't think most of you guys know what Lind is, so I kind of remember what they are. Let's go to the next one. XLRE, the real estate. Yeah. Well, it's not too much. Also 2.32%. Not very popular. Um, young people just don't like dividend stocks anyway, so that's probably why. They're not heavily invested. Prologis. I don't think I know that one. American Tower. I kind of remember that one. Yeah, public storage. Oh, here we go. You could do the what's it? The Pawn Store, like Pawn Star reality show. Yeah, that's what it is. Simon Property Group. It's a big guy, big beast. Digital Reality Trust. They actually have real estate for computers, uh, data centers, essentially. Probably that's probably where Philippe understands more than I do. Philippe being John's friend, who now has a job at Netflix managing their data centers for a nice 700K salary. It's nice to be working in data centers for Netflix, I guess. That's very nice salary. Hotels. Got some hotel stocks here. I wonder if they have other hotel stocks. They don't have any much else. XLK. So I left XLK as a separate tab. Now we're gonna see the guys that you're familiar with: Apple, Microsoft, Nvidia, Avago, AMD, Oracle, Salesforce, Adobe. So I think you know most of these stocks, some of them at least. Look at it. It's 31.92% of the S&P 500. This is the reason why I just look at the Nasdaq, and not only the Nasdaq, I just look at the semiconductors, because this is what's pushing the stock market up, not these other guys and the rest of the pie. You just need a few stocks here to drive that price of the S&P 500 up. Okay? So yeah, this is exactly why I only focus on these companies. Yeah, I don't think you know much of these except for maybe Micron that I mentioned a few times this week. But yeah, you should know these. You should know these top ones. And finally, the last boring sector, utilities, 2.5%. I think this area has the most room to grow in the next 10 years. Okay, so let's look at NEE. Yes, this is one of my favorite stocks. NEE, Southern Duke Energy, Constellation. No. PG&E, my second one. That's another one I like. Excel, nonsense. Yeah, no, nothing. You definitely should look at water stocks. So it looks like American Water Works is the top one here. but the future requires both water and electricity, and we're gonna need to use a lot of them in the future. So definitely be on the lookout. These stocks tend to be boring, but I've shown examples when they're not so boring. Um, all right, so we're done with the utilities. Oh, let's see who's left here. Okay, yeah, man, King TL. Oh, King TL is here. Let's see if you know what's wrong with it. Oh, King TL is here. Oh man. Well, my bad, King TL. I mean, this is not the right stream. You should be going to the different the 24-hour stream. Yeah, you can't bomb this one. This is just me talking. Okay. Anyhow, let's go on to the lesson of the day. So, this is your homework. Whoever's here can read this. There you go. All right. I gave the link so you can read this at your own leisure. The Anatomy of a Trading Range by Jim Forte. All right. Uh, you can read this on your own, but I'm going to focus in on this schematic. This is the accumulation. Okay, guys, it's the accumulation. Now, you remember the Hang Seng Chinese stock market, the Hong Kong stock market I showed you, another schematic that looked just like this. Okay, I'll tell you to read that on your own. You can read this later, and we'll go over it sometime down the line. But I'm gonna read this blog post. This blog, I'll put this link in the chat too. Let's put this in the chat. Right here. Yes, Princess, we have 2 streams. I do the stock stream on this one. You can go to the 24-hour shit show on the other one. I'm not sure what's going on over there right now. Um, but yeah, we're working overtime. So the Wyckoff. Let's read this. Wyckoff power charting. Let's review. So Bruce Fraser. This dude writes a lot of blogs for stock charts, and you can just read them yourself. And they give you a big idea about how to analyze the stock market from the Wyckoфfian perspective. Okay, but let's just look at this. I gave you your homework. You can read that PDF on your own time. But let's just read this one. Previous posts have been devoted to the process of accumulation. Okay, what's accumulation? I showed you this, right? This is accumulation. This is just like the Hong Kong stock market I showed earlier. What distinguishes power charting with the Wyckoff method from other chart pattern recognition tools is our focus on tracking the footprints of the composite operator. Okay, I have to talk about what's the composite operator. Composite operator means the big money, the smart money, the people that are buying stocks slowly over time, right? They just can't jump in like you guys as a trader and just go buy a ton of stocks because that will affect the price right away. So they have to buy things slowly if they want to buy tons of shares, tons of shares. So when you're talking about Apple, which has probably millions of outstanding shares free floating, and somebody wants to come in and just buy chunks of those shares, they got to do it a little bit day by day. Okay, so that's what the composite operator is doing. A long-term trend requires intelligent accumulation of very large quantities of shares prior to its launch. This must be done quietly and deliberately. Therefore, accumulation is a logical, sequential, and identifiable process. Vertical charts with volume are the chosen tool for tracking the activities of the composite operator. Accumulation is the preparation phase for the markup, and distribution is the precondition of the markdown. Okay. Now, I'm not going to go into distribution, markdown, whatever. Right now, you just want to do accumulation and markup. So the accumulation is when finally we hit a bottom, we're accumulating, we're building a base here. The buyers are coming in, buying, 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 buying. And then finally we start moving back up. And once we get out of here is the markup phase, when the price just starts moving up, 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 until it reaches the final end. So let's just look at the phases here. Let's just look at the phases, all right? Um, I think let me just talk about this schematic number one here. So accumulation schematic number one. Wyckoff schematics model the key characteristics of the accumulation area. Variations will always occur between the idealized and actual trading range. So these diagrams are just like, you shouldn't you shouldn't treat them like the holy grail where it always exactly has to look like it, but they should look very similar to these type of graphs. I think what's important is to recognize there are phases in the accumulation, okay? So we just look at phase A here. Supply has engulfed the market, resulting in a large downtrend. All right, that's when we start falling. Prices start falling, and we're trying to find the bottom. Towards the conclusion of the decline, selling becomes panicky. Let me see. Okay, idealized. Yeah, yeah, panicky. Okay, remember, panicky and widening price spread and volume. Preliminary support, the PS, is an early indication of nascent demand. The selling climax follows on dramatic price spread and a massive expansion of volume. Intensity in selling is not sustainable and is followed by a brief and large rally attempt that is short lived. The automatic rally indicates that the SCLX is completed. Phase A is fulfilled with a test of the SCLX and is labeled ST. Okay, you see this part here, we're expanding and contracting, finally stopping, and then we're going to finally go into phase B. Phase B, a cause is built in phase B. Characteristic of this phase is a trading range with extreme volatility early on that diminishes as it matures. Volatility unnerves weak holders of the stock who weathered the prior phase, but who finally give up and sell dump shares. The theme of the B phase is absorption. Wyckofians will attempt to determine if quality absorption is taking place during this phase. As long as supply is present, phase B will persist, building an ever bigger cause, okay, which is measured using. Okay, I'm not going to go into point and figure charts yet. That's more advanced. Use support and resistance lines to define the outer bounds of the phase B trading range. Comparing the duration and extent of rallies and reactions in phase B will often provide early clues to the degree of bullish absorption. All right, that's a lot of words, but you have to understand, once you start building this range here, so phase A is finished. We're going to phase B now. We can see that a range is being built, right? These two lines here, the line that starts at the automatic reaction and the selling climax, SCAR. And now you see a range. You see this continue on. So when we get to phase C, we're going to see the final test here. Okay. So phase C, absorption is nearly complete. Smart money composite operators test the stock to determine if it is poised to begin its markup phase. The test is to determine if the supply has been exhausted. And this is done by removing bids at support and allowing the stock to breach the new lows. Okay, so that resistance we have in SC, we're breaking it again, and we're doing even more. So this one is also breaking the second stopping action here, and we got two lines, and it broke both of them. Now, this is where you have to be careful. Sometimes when this happens, it just keeps dropping, right? That means this is over. This stock is really dead. But if it bounces back in, you're prepared to buy. So once you see this kind of range being built, you're gonna be watching. You have this stock on your watch list, let's say, and you put it alert. Like you can set alerts, on TradingView or any or some other app, and it will send you a text message or something. It says like, "Hey, bro, this stock just broke $100 a share or something." Let's say this is $100 and just broke it. You'll just be saying, "All right, let's say today I'm gonna be watching that stock on my phone, and I'm gonna be ready to buy." So once you see something like this happens, you're on the lookout. And it might not even be that day. Once it breaks it, it might just be staying down here for several days, and you're just waiting for it to climb back up over these lines, and you're going like, "All right, it's time to buy." So let's go back here. A breakdown here is a bear trap, catching the last of the retail sellers and short sellers in a false down move. This action, called a spring, comes in three types. At times, the final low prior to the beginning of the markup is a higher low. Wyckoff analysis deems this a last point of support, okay? And it is just as important as the spring, while possibly more elusive. Testing the lower bounds of the accumulation range as a final act before the all-important start of a major uptrend is the lofty purpose of Phase C. All right, so once we get up here, we're going to get to our Phase D where we'll see our LPS. So what's LPS? Successfully testing the lower trading range bounds in Phase C will unleash a condition whereby demand engulfs remaining supply. So this is Phase D now. The stock price will move up on widening price spread and expanding volume. The D phase is the final markup out of the accumulation range. Phase C and D are tactically important as you will want to make your initial purchases on a rising scale during these phases. Colorful terms, jump across the creek and sign of strength, denote leaping price action. Reactions occur on narrowing spread and volume and are labeled last point of support or back up to the edge of the creek. In Phase D, demand is in control, and other professional investors begin to recognize the emergence of a trend in this attractive stock. Their demand drives the stock price upward, as it is clear very little supply exists, and each new buy program pushes the price higher and higher. All right, I'll stop there because we haven't gotten to Phase E yet for the Hang Seng, and I'll bring up that chart. Because once you see what I was describing, I mean, it's kind of wordy, but hey. I mean, this is such a beautiful example. Really, it is of the accumulation and the phases because it looks just like it. Like you just look at it like this. You just see this whole action here. This whole action. What we haven't done is Phase E. We haven't gotten there. This Phase E is what I'm guessing is going to happen later. So this stuff just looks, man, it's such a beautiful mirror. You can see the ST phase, right? ST phase. And then you see here the selling climax, the SC, the automatic reaction, the AR, and then once you have that, you set the bounds, you set the bottoms of these ranges, and then you go drop below this range, you just go into this the second, so the phase B. So this chart, like, you just see it's tiny, right? This space between them is tiny, but here it's huge. So it's not going to exactly look the same. None of these things will, but at least you have a model to work off of. And from that point of view, you can just look at this chart like that. And I feel like AI could probably do a better job at just recognizes these patterns on its own. And because it's just a picture, AI does a very good job at analyzing pictures, and charts are just pictures. If it practices on a bunch of charts, why not? Why not let AI just take over this kind of work? But as a human, you can read this pretty quickly. You can read tons of charts and look at this. So we'll see. If this thing behaves like this, then we've finally hit that SOS pattern. And this will move on to phase E and the final breakout to the next phase. So yeah, China's back in play, guys. You got China, the second world's economy, doing stimulus. You got the first world economy doing stimulus. We're almost ready to go, and that's about it. Hey, we got about 1 hour, 16 minutes. I think this was a good first trial edition of my charting program. Hopefully, I'll get more polished in how I present things, and you can ask questions in the comments. You can email Portia and see if we need to make a new contact email just for stock questions. So we can make an email dedicated to just asking stocks to me, uh, and we can go from there. So yeah, I'll give Portia's email. So if you have any commentary, you can talk to her, and she'll forward it to me. Let me get her email. Okay, that's right. Here's Portia's email. So yep, just email her. So you can watch this video whenever you feel like it. Send it. Send any comments, suggestions, and she'll forward it, and we can improve this program as we feel. And yeah, that's it. Good night, folks. It's almost 11:30 my time, so it's about to hit 3. So HB should be woken up, and I should be back on the 24-hour stream. I'll see you there.